Hey friends, welcome back to the channel. My name is Sanjay and in this video we're going to look at an ETF that went up 30% in the year of 2020. As a comparison, VAS and IVV only went up 1% and 6% respectively, these broad-based ETFs. This is some phenomenal growth from this particular ETF. Now I admit this is not dividend income included, this is just capital gains, but still 30% in the middle of a pandemic. Let's have a look at this ETF. This ETF is actually BetaShares NDQ product. It tracks nASDAQ's top 100 companies. Now I got the idea to do this video when I actually saw a comment from one of my viewers, Rocco Procillo, where he said NDQ 100% consistently makes all these other suggestions seem rubbish. That's the cut of direct transparency you get on YouTube. And this was, I think Rocco was actually responding to a comment or to a video I made around VAS and VGS, and I was saying these are the only two ETFs you need. And he's like, what are you talking about? You need something like NDQ, it's outperforming all of this. So it's a good point he did make. And also a follow-up comment from Sugar Dumpling from a few months ago, where he was saying, I'd like your thoughts on NDQ, and also something around rebalancing, which will be a topic I will do eventually. But I thought I'd do this video to actually address some of these comments, because NDQ, I'll be honest, I hadn't actually thought about it until Rocco had mentioned it. So this is, I guess, one of the advantages of having a YouTube channel is people will suggest ideas and you're like, oh, hang on, that's actually not a bad ETF. So in this video, we're going to look at what NDQ is as an ETF. We're also going to try and compare it to a few other ETFs, because the real value in understanding an ETF comes from comparing it to other ETFs and saying, oh, okay, that's where it's different, or that's what's outperforming, or that might be why it's outperforming. And then we're also going to talk a bit about what my personal thoughts are on this ETF. So I'll put that towards the end in case you don't really care, but I'll try and sort of comment on how I would include it in a portfolio if I was to. As being completely transparent right now, it's not in my portfolio right now. So first and foremost, what is NDQ? Well, it is an ETF by BetaShares which tracks the top 100 companies on the nASDAQ. Now the nASDAQ is one of the two exchanges in the United States. There's the New York Stock Exchange and the nASDAQ. And the nASDAQ is considered the stock exchange where they have more of the growth-oriented companies, the new tech-oriented, growth-oriented companies, where they generally don't pay that high dividend payout, I'd say. Whereas the New York Stock Exchange has all your older, tried and tested companies that have been around for a while. So as you'd expect, the nASDAQ has companies such as Apple, Facebook, Microsoft, Google in its form of Alphabet, Tesla, all these sort of heavy-hitting technology companies. So what you're essentially doing is investing in all these large technology companies, and it's described as, I think in the marketing material, as the new economy ETF. You're essentially investing in the future of the world. Now, I always like to mention when you're looking at an international ETF, always consider the impact of currency. So I'll just mention it here, but I will do a bit more detail later on in the video, where there is a hedged version of NDQ in the form of HNDQ. And you can use the hedged version if you're worried about the impact of the US dollar and the Australian dollar fluctuating too much. So let's now look at a table of comparison where we look at NDQ against a few other ETFs. Now I admit this is not a great like-for-like apples against oranges kind of comparison. I've probably been a bit lazy in that sense, but I've looked at NDQ against IVV, which is a big ETF that kind of tracks the S&P 500, which is like the top 500 companies in the US, which I think is a reasonable representation, and VAS, which is sort of a big ETF that tracks all the big companies in Australia. So when you're looking at NDQ, you see market cap wise, it's a bit on the smaller side, but I think it's also a bit newer than compared to IVV and VAS. So you wouldn't expect too much in terms of its size to be that explosively big compared to some of your longer term ETFs that have been around a while, and also broader ETFs. Then you look at fees, 0.48% against 4% and 10%. It is quite expensive compared to these others. However, it is a narrow ETF. So generally when you find narrow, more specialized ETFs, they do tend to have slightly higher fees compared to your more broader ETFs. Index-wise, it's as expected. It's the nASDAQ 100 against the S&P 500, and you're looking at 100 companies you're investing in against the 500 and the 300 of the other two ETFs. Now, the total returns in terms of capital gains, this is what I was pointing out. You're looking at 30% against 6 and 1%. I'll throw up some diagrams. In terms of holdings, again, it's what you'd expect. It's all your top tech companies for NDQ, whereas IVV has all similar companies, but also has Berkshire in there, which I guess is listed on the New York Stock Exchange. And in terms of VAS, you've got all your usual suspects for Australia. Now, when you look at the capital gains, this is where I try to call out this massive graph where you see in the year of 2020, when you're looking at just capital gains, so just gains from actual price appreciation, you're looking at 1% against 6% and 30% from NDQ. This is like a monster ETF that really performed quite well. Then when you pull out to 5 years, this is where I guess where Rocco was coming from, saying, why would you look at VAS and VGS when you have something like NDQ that's done over 180% against something like 80% and 40% on IVV and VAS respectively? And when you look a little bit deeper, look at what happened in COVID for NDQ. COVID occurred and the bottom point of NDQ was still higher than the peak of IVV before it occurred. It's that bottom section right there that makes you think even when this thing tripped over, it was still doing well. Also, when you look at NDQ using a bit of visual analytics, should we say, using your iometer, and you look at the slope of VAS and IVV after COVID at the bottom, coming out of the bottom, and when you look at NDQ, look at the slope on NDQ, it's way steeper. It's come out much more aggressively after COVID. And I guess this is where you would look at and say, hey, look, it's a technology-focused ETF. Of course, you're going to get some amazing growth in the year of 2020 for tech-oriented company. Now, let me quickly pivot to the conversation between hedged and unhedged, because that's also probably going to be a question that's circulating in your mind around, should I get HNDQ or should I get NDQ? Now, for that, I'll just add in a quick comparison between NDQ and HNDQ. Again, HNDQ is a bit newer. I think it came out mid last year, and it's got a much smaller market cap, 72 million against the 1.6 billion from NDQ. Now, in terms of fees, as you'd expect, NDQ is a bit higher because generally when an ETF is hedged, there's a bit more to it, and they'll charge you a slightly higher fee for that. Everything else is pretty much the same. It's still investing in the same companies, it's just it's got that hedging component to try and manage against currency fluctuation. So to have a more informed conversation about currency and hedging and unhedging, let me throw up a trend of the Australian dollar against the US dollar. And you can see this here, I think this is about 15 years. And you can see how it fluctuates a little bit above and a little bit below 80 cents really. So that means one Australian dollar is buying about 80 cents US dollars. Now, why does this matter when it comes to investing internationally? Well, the returns you're getting from the ETFs that invest outside of Australia need to be translated into Australian dollars, which means you're going to be impacted by not only the performance of the underlying companies overseas, but also the performance of your home currency against the international currencies. In this case, the fluctuation of the Australian dollar against the US dollar. Now, I've been thinking about how to easily translate this to people on YouTube. One way to visualize it is if you throw up this equation where you say the returns of an unhedged ETF is equal to the returns of the underlying ETF, so the capital gains plus the distributions, plus fluctuations in the currency. Whereas a hedged ETF would essentially try and cross out the impact of the currency fluctuations, right? So in relation to this, let me throw up a quick 6-month graph which looks at NDQ against IVV, HNDQ and VAS. Really what you want to be looking at here is NDQ and HNDQ, and you can see the hedged version has actually performed even better than NDQ. And that's because in the last 6 months, the Australian dollar has actually gotten stronger relative to the US dollar. And it's sort of cancelled out some of the gains you've gotten from the performance of NDQ. Now, if you cast your mind back to that long-term graph of Australian dollar against the US dollar, and you see when COVID hit, you can see the Australian dollar got actually quite a bit weaker against the US dollar. And that generally happens all the time actually. Whenever there's some kind of global economic uncertainty, the Australian dollar usually gets weaker against the US dollar. And it's actually more the case of the US dollar is considered a bit of a safer currency, and it just gets stronger against pretty much every other currency in the world. And because of that, even though NDQ dropped, it would have been cushioned a bit by this drop because of the currency. Whereas after the drop, you can see how the Australian dollar got stronger over time from being under 60 cents to now being in the high 70s, and that has now had an impact on NDQ. And this is why when you look at the hedged against unhedged version, you see the hedged version has actually outperformed the unhedged version recently because of the currency fluctuations. Now, this will be consistent in any ETF situation you're looking at, VGS against VGAD, also a hedged versus unhedged situation. The hedged would have performed better while the currency is getting stronger. Always important to point this out. Let me now share a few thoughts on NDQ and where I'd see it fitting into a portfolio, especially mine if I were to consider buying this. So the first thing I'd point out for me is I generally like ETFs that invest broadly across multiple industries, large amounts of companies, and even large amounts of countries. That's sort of what I prefer. So instantly NDQ is not something I would be considering. Now, that being said, though, I feel a bit like Jeremy Clarkson after he reviewed, I think, one of these Alfa Romeos in the Grand Tour, where at the end of the reviewing of the car, he actually said he then drove to the dealership and seriously considered buying it. Because my process of going through looking at NDQ has actually made me think twice and think, maybe I should include it in my portfolio. It's been a bit of a journey here. But I would still say I don't think I would include it because it's still too narrow an ETF. Yes, I buy into the idea that it is a new economy ETF. And yes, I think you should have exposure to these companies. But that's where someone like me would say, look, I do have exposure to these companies through holdings like VGS and VGAD. I have the hedged and unhedged versions. And that's the thing, when you look at NDQ and you look at its holdings, it's got, Apple, all those various companies, and you look at the percentage holding, and then you look at something like VGS and the percentage holding there, it's not the same, but you do have similar kind of coverage, whereas VGS just has more companies in addition to that. So yes, you're missing out on the concentrated gains, but you have a little bit more diversification. So that's my first thought. The other thought that will be going through my mind is, have I missed the boat? Now, I know this is not great when it comes to ETFs, because it's an ETF, you should be able to invest in it for a long run. But have I missed the boat in terms of gains coming out of the COVID economy? That's a good question, and I don't really have an answer, but I guess your first thought is, the gains that I've seen in all these tech companies, should I expect to see continue on for the next few years? Do I want to get exposure to those concentrated gains over the next few years? Something to think about. Then the conversation would transition to, should I get the hedged or unhedged version? And I guess for that, you got to take your mind back to that Australian dollar against US dollar graph. Look at the trends and have a consideration and we'll have some thinking around which way do I see the Australian dollar going against the US. If you think it's going to go through a period of getting stronger against the US dollar, then the general thinking is you should get the hedged version so you can try and cancel out those diminishing impacts. Or if you think the Australian dollar is going to continue to get weaker against the US dollar, then you'd be okay, generally speaking, with the unhedged version. If you thought it was going sideways, it doesn't really matter. And if you didn't really know which way the currency was going, I mean, you wouldn't be blamed for just buying a bit of both and holding on to both and having a bit in hedged and a bit in unhedged. So for Rocco and Sugar Dumpling, hopefully that's given you a bit of value in terms of looking at NDQ. I think it's a great ETF if you wanted that kind of concentrated exposure to a tech sector. And I know there are actually ETFs out there that do say they are concentrated exposure to the tech sector. I guess the benefit of NDQ is that it's only just looking at the top 100, and just because it's tech or not tech, different companies can come into that ETF over time. So I guess you're getting the best companies in the US. As always, if you have any comments or follow-up thoughts, please feel free to leave them below. I do always try and get to every comment and make a reply on all of them. If you're interested in any of my other videos around ETFs, check out the playlist here. I have removed a few other videos from that. I've just tried to make this ETF about comparing ETFs, where if you want to go through this process that I've gone through on other ETFs that I've done, feel free to check out the playlist there. And I've got some other videos on investing and personal finance topics as well. So hopefully I'll see you in the next video. Bye for now.